What you missed on The Breakfast Huddle with Elliot Danker, Yasmin Yonkers, and Ryan Huang. Only on Money FM 89.3.
Well, here's what's grabbing the finance headlines right now. The U.S. Federal Reserve has just released minutes of its latest meeting this morning. It's worried about inflation being too strong and maybe derailing the economic growth. It's also worried about the trade wars brewing, and investors are bracing themselves for that trigger tonight. In just a few hours, Singapore time, from Washington, against $34 billion worth of Chinese imports, and President Donald Trump has fired another salvo this morning. He is threatening to escalate the trade war. He says, watch out, China, you could face more than $500 billion in tariffs. So we've got Jameel Ahmad. He is the Global Head of Currency Strategy and Market Research at FXTM with us. Jameel, morning.
Good morning. Thank you very much for having me.
Lots of things to talk about. So let's start with the tariffs. Looking ahead, what are the markets pricing in? Because we saw the US markets last night close in the green.
The markets have obviously been very concerned about the trade war headlines now for some time. It's been a reoccurring risk in the financial markets, and it's been something that's really dominated attention for a number of weeks and perhaps months. When it comes to what the markets are pricing in right now, it appears to be a little bit of the trade war tariffs, but nobody really knows what impact this is going to actually have on the global economy and whether these tariffs will really be introduced. We've still got a few hours to the deadline, and we know from the past that President Trump has been known to, reverse his decisions. So we've still got a few hours before these really kick in. What is really important to look out for next is what exactly happens from others on the other side of the tariffs, such as China and the European Union, and how they perhaps retaliate to the messages from Trump and this news that Trump is saying on social media and so on, that he will actually be unleashing these tariffs in just a number of hours from now.
A very good point, Jameel. So stay tuned, because Donald Trump has been known to change his mind very suddenly. So how do you see this playing out? Because you've got a couple of potential scenarios. China hitting back, and then maybe US hitting back further, and then you've got multiple disputes on the Canada front, the European cars front, and also against Mexico. On Monday, when all this settles down, how do you see markets reacting?
This is exactly the point that needs to be made. It's not just China and the United States that are involved in this, although it's dominating the headlines. There's many other economies across the globe who could be impacted by these trade tariffs. Not necessarily Canada, European Union, Mexico, just a few of those nations. What we really need to look out for is how investors and the economic data really reacts to this, because nobody knows what tariffs are going to do to the economic data. So what we could see is more risk aversion in the markets, where we've got quite a cautious sentiment that's been quite prolonged in the stock markets now for a couple of weeks, where the stock markets have really suffered from a general lack in momentum. You don't know whether they're going to be in the green or the red. It's cautious. It's really difficult to identify the trend. And we've also seen this relate into other aspects of the FX markets as well, such as the currency markets. So what we need to look out for is whether there's more risk aversion, whether this encourages a risk-off atmosphere from investors, which might mean more pain for the emerging market currencies as well, as an example of somebody who suffers from a lack of risk appetite.
All right, we've got Jameel Ahmad. He is the Global Head of Currency Strategy and Market Research at FXTM. So Jameel, I've just want to zoom in a bit further on the potential impact on Monday. If we zoom in on the asset classes, the currencies, could we see maybe safe haven currencies and assets spike up?
Well, the two currencies that seem to be gaining from these trade war headlines is actually the Japanese yen, which we know is a very close friend of investors in uncertain times. In market uncertainty, the Japanese yen seems to benefit. And actually the US dollar, which has surprised a few people. But I think the reason why the US dollar is gaining with the trade war headlines is because of two reasons. One, because it's the world's reserve currency. So it could be that if economies become quite worried about what's going to happen, they might just pile up on US dollars. And secondly, there is an outlook that if a trade war does really develop, that the United States economy will be less negatively impacted by a trade war than those economies that it's targeting, such as China or the European Union or Canada or Mexico, whoever it is that President Trump has this quite negative rhetoric on trade. Those are the ones that could possibly suffer from this.
Okay, I'm going to switch tracks a bit, Jameel, to the FOMC minutes that were released this morning. Two things that I think were making the headlines. It's concerned about inflation. It's also concerned about the trade war, of course. Why is the Fed worried about inflation?
Inflation's been something that the Federal Reserve have always watched, and typically the Federal Reserve have struggled to see the inflation pressures that they need, and this had been the case for a number of years, and why the Federal Reserve were very slow towards raising US interest rates. Now, inflation seems to be ticking a little bit higher. We don't know whether this is because of increased price pressures or whether it's because of the rally in the oil markets. It could be because the US economy is just performing so consistently well, and it is, that people have more disposable income and it's raising more prices and obviously expenditure and consumption, which is a positive sign. So I think what the Federal Reserve needs to do is monitor inflation over the coming months. They obviously seem quite consistently set for raising US interest rates at least once or twice over the second half of the year. However, if inflation data really ticks up beyond their target at 2%, there is a chance they will accelerate their course on monetary tightening.
All right, Jameel, that's going to be my next question. So what do investors take away from the minutes? Is it a bit more hawkish?
Yes and no. I would say it's more consistent, to be honest. The Federal Reserve have got a very constant monetary bias that they're going to be raising US interest rates. It's quite a consistent tone from the Federal Reserve that we know that their outlook is towards higher US interest rates. What's really helping the Federal Reserve and the US dollar in this instance is that the Federal Reserve are offering consistent guidance on monetary policy, which other developed central banks are not willing to do. The Bank of England, for example, are constantly reversing back and forth on interest rate policy. European Central Bank also are not willing to offer the guidance that investors want, which is why the euro has suffered in recent months. This is seen as supportive for the US dollar as well.
All right, Jameel, let's talk about something that's making headlines as well, some fears around recession in the US. Looking at data right now, is there a risk of that happening?
No, I think it's just a headline. The US economy is performing extremely well. The data is very strong in the United States. And what we're seeing that's really helping this dollar rally is that the US economy is far beyond its developed peers. And we've talked about economic and monetary divergence in the past, which has strengthened the dollar, which essentially for viewers means that the US is so far beyond in progress than its developed counterparts that this has supported the dollar. It's still happening. The US economy is so far ahead of Europe, it's so far ahead of Japan, it's so far ahead of the Bank of England. And if the US interest rates continue to be increased, this is only going to stretch this divergence.
Well, thank you so much, Jameel. We've been speaking with Jameel Ahmad. He is the Global Head of Currency Strategy and Market Research at FXTM.